Good afternoon, students. Am I audible?
Yes, ma'am.
Okay. Okay, can everyone see the screen?
Yes, ma'am.
Okay, so let us begin with the session number 3 on basics of accounting relating to the pre-placement training. So already in this different sessions, what we have covered on basics of accounting, we have already covered meaning of accounting, basic accounting concepts, basic terms and conditions of accounting, books for recording transactions. Today we will be seeing what are the basic books for accounting, what is depreciation, and some questions relating to accounting that can be asked in the interview. So, what are the books of original entry? What are the books that are there when basically you're doing accounting? So, we have journal, we have cash book, ledger, trial balance, profit and loss account, balance sheet. So, so in the interview, they can ask you all to define or explain any of the book of accounting. So suppose if they ask you what is journal, then it is nothing but, as you all know, journal is the first book of entry of any business transaction, because journal, as you all know, is the official book of the business, the first book of the business in which transactions are recorded in a chronological order. When I say chronological order, as in when the transaction takes place, it is first recorded in the journal. And journal, if you go through any journal in any company, it will give you all the financial transactions of the business. Okay, because all the transactions without any bifurcation are first recorded in journal. Next we have is cash book. So cash book is nothing but, again, it is nothing like a financial journal. When I say financial journal, it means only the cash receipts and the payments of cash, including bank deposits and withdrawals, are shown in the cash book. So cash book purely is a financial journal which only shows the receipts made in cash, the payments made in cash, including the bank transactions. So whatever cash book entries are there, it is then posted into ledger. So after journal, cash book, all the entries are then posted into ledger. So what is ledger? Ledger is nothing but it provides, it is like a record keeping, but here the segregation has been made in ledger, and ledger has a different debit as well as different credit accounts are prepared under ledger. Reason being, ledger will show you individual accounts where the bifurcation is being made. Here in journal, all the transactions are being recorded. But ledger represents the record keeping system of the company's financial data, with the debit and credit accounts are there. And based on the ledger balances, trial balance is prepared. So trial balance is nothing but where all the ledgers are compiled into the debit and credit columns, and the debit and the credit, since we are following dual aspect of accounting, the debit total has to match with the credit total. So basically trial balance is prepared based on the ledger balances with debit and credit columns, which tallies where the debit is equal to the credit because of the dual aspect which we are following in accounting. And trial balance is prepared usually at the end of every reporting period. Now let us see what is profit and loss account. As we know, it is a financial statement. These statements will summarize all the revenues, all your cost, expenses that is incurred during a specified period. Okay, usually you can prepare it for a quarter. Trial balance you can prepare for a quarter, half yearly or yearly also. So these the P&L account, what does it depict? It shows the important point about the company's ability, or you can say inability, to generate the profits by either increasing the revenue, reducing the cost, or both. So it shows the company's ability to generate the profit. Next is balance sheet. As you know, balance sheet is again the financial statement of a company which has all its assets, liabilities, equity, capital, okay, at a particular point of time. So we in balance sheet we have assets on the one side and liabilities on the other sides. Okay, and we know what is the meaning of assets as well as liabilities, which we have covered in our previous session. So these are the books of original entry. If specifically in the interview they ask you that where are the transactions recorded, where are the transactions first, business transactions first recorded, you will have to be quick enough to answer that it is recorded in journal. They can also ask you questions that trial balance is based on which book. So trial preparation of trial balance is based on which book? You can tell trial balance is purely, the preparation of trial balance is purely based on year. Okay, and where all cash receipts and payments are being entered, those entries are shown in which book? Cash book. So though you'll know the meaning of it, they can ask you a question where you need to exactly judge that which book is used for which particular purpose. Next is depreciation. Let us understand what is the meaning of depreciation, what is the meaning of amortization, or the different types of depreciation, and why depreciation is being done. So, students, as you all know, already you all are aware of it, that depreciation is nothing but it is a decrease in the value of the company's assets over a period of time. And the reason can be maybe because of looks of time, maybe technology change, maybe the asset has become outdated. Okay, so depreciation. So can anyone tell me why is depreciation charged to P&L account? What is the logic behind charging depreciation to P&L account? Can anyone tell me? If the interviewer asks you a question that why is depreciation needed to be shown in the books, we know that the asset value is decreasing over the period of time. Why it has to be shown in the books of accounts? So can anyone tell me
It is
what
an expense.
depreciation is? And when you are depreciating, actually is money flowing out of your pocket? Students, do you all know the answer? If no, then I shall answer it. What is the logic behind depreciation? Why it is being charged? So, students, why depreciation is charged? Because suppose, for example, we purchase a particular asset. Okay, now purchasing an asset becomes your capital expenditures, but P&L account shows only your revenue expenditures. You all know what is the difference between capital and revenue expenses. So your P&L shows only your revenue expenses, but the expenditure that you have spent on your assets needs to be allocated systematically over the life or the period of the asset. So depreciation is nothing but it is a method of accounting which allocates the cost of the asset. When I say depreciation means it is charged only on the physical or tangible asset which you can see, touch. Okay, so it is depreciation purposes because you have to allocate the cost of the tangible asset, okay, over its useful life. Altogether at once you cannot show the complete value of the expense in your P&L account. So over a period of time that expense has to be bifurcated over its useful life of the asset. So depreciation represents that how much the asset value has been used up by the company each year. So that is the reason for depreciation. Depreciation is only because of allocating the cost. Because since it is a capital expenditure, you cannot allocate 100% in the first year of purchase itself in the P&L account. Therefore, by the way of depreciation, you will allocate it over a period of the life of the asset. Next, what is the meaning of amortization? I hope everyone understood the logic of depreciation. Now, what is the meaning of amortization? See, students, we use the word depreciation for tangible or physical assets. We charge depreciation on tangible and physical assets. Now, amortization is same as depreciation. but it is charged on which assets? On intangible assets, which are not physical assets. Now, when I say intangible assets, means like patents, trademark, franchisee, okay, copyrights, which you cannot see or touch. So, amortization is same as depreciation, but amortization is charged on intangible assets. So again, amortization is nothing but spreading an intangible assets cost over that asset's useful life. So every year you're amortizing your P&L account, okay, up to the useful life of an asset in some installments, or in based on the method of amortization you're using, you will allocate that money, that cost, yearly up to the expected life of the asset. So this is again very important, because in interview mostly they ask you what is the difference between depreciation and amortization. Both mean the same, but depreciation is charged on the physical asset and amortization is charged on the intangible assets. Here we can understand. Let us see what are the types of depreciation. They may ask a question. So what are the types of depreciation? You can tell there are different types of depreciation. Like we have straight line method of depreciation. We have diminishing method of depreciation, which is also called as declining balance method. Okay, we have sum of years digit depreciation, we have units of production depreciation. So majorly the type of depreciation that the companies follow is straight line depreciation and declining balance depreciation, or return down method. So now what do you mean by straight line depreciation? So you can see that straight line depreciation is nothing but the same amount of depreciation is charged every year to the P&L account, and this depreciation is calculated on the original value of the asset. Whereas in written down value method, what happens is the depreciation is charged on the balance reduced every year. The balance reduced every year, on that value the depreciation is charged. So depreciation only in the first year is charged on the original value, but in the remaining years under written down value method it is charged on the written down value. And then we have sum of years digit, where based on the number of years, that is the expected number of years a particular asset has. Suppose the asset is having 5 years of expectancy life, so they will calculate, they will allocate 5 to the first year, they will allocate a value, a digit to each years. So 5 to the first year, 4 to the next year, and 3 to 1, so on. For 5 years the value will be allocated, and then it will be multiplied with the rate of depreciation. So these are the different types of depreciation, and this is the meaning of depreciation. They may ask you what is the logic why depreciation, though being a non-cash expense, because every year that much cash is not going out of your business, though being a non-cash expense, why is it charged to P&L account? So by now I hope you all have understood what is the logic for depreciation. So now we have seen, or we have gone through different like I have brushed you all up on the concepts of accounting, as well as we have gone through the different terms in accounting. Okay, so now let's go through the basic interview questions on accounting. So since here I have 100 questions on basic interview questions that can be asked on accounting. It is very simple. It is already what you all know. Okay, but before going for an interview, you can brush up this. These are with questions, and the answers corresponding to the questions are also specified here. All I will do, what I will do now is I will just read out the questions so that you'll understand what type of questions can be asked. It is just based on your basic students. If your basics are strong, and if you have not mugged it up, if you have understood it, you can answer any question. So totally we have 100 questions here. So I will just read out the questions. Answers are already there. But what I want you all to do is when I share a particular file with you all, I want that you all should see the only the question, see that whether you all can yourself answer it. And this all is based on only the basics that we have covered, or the basics that you have learned since your college days. So let us see the types of questions that can be asked. How many types of business transactions are there in accounting? So just now in depreciation, I told you transactions can be of revenue nature as well as of capital nature. Correct? So next, explain the real and nominal accounts with example. So as we know in the rules of accounting, we have personal account, real account, nominal account. So they're asking what does a real account does consist of, and what does a nominal account consist of, and with examples. So all these is already dealt by all in your first semester. Just you'll need to just understand. Okay. Next is which accounting platform have you worked on? So this is a basic, and I think this is the most frequently asked question whenever you're opting for a job profile in accounting. That what accounting platforms have you worked on, like Tally or any other platform like EP, Cook. So based on whatever you all have worked on. See, this is I've just given a general answer, but students, if you have not worked on any accounting platform, be very truthful in answering, because they may ask you the questions. If you just say I have worked on Tally, they may ask you the questions then relating to the features of Tally, which you may not be then able to answer. So only if you all have actually worked on any accounting platform, then only you all opt for this question. And I recommend you all that please work on any, if you all are mostly interested in a job in accounting, then you all make sure that you all have some training in some accounting platform. Next, what is double entry system of bookkeeping, and what are the rules associated with this? What is working capital? How do you maintain accounting accuracy? What is TDS? Where do you show it on balance sheet? What is the difference between accounts payable and accounts receivable? Okay. So this is nothing but like again our debtors and creditors. Then what is the difference between trial balance and balance sheet? Is it possible for a company to show positive cash flows and still be in a grave trouble? Okay, what are the common errors that is happening in accounting? What is the difference between inactive and dormant accounts? Okay, are you familiar with the accounting standards? This is again most frequently asked questions. If you are not familiar, see, maybe in the further sessions, I may take entire session on accounting standards. Okay, so where I will explain what each accounting standard exactly stands for, and when each accounting standard is to be used. Okay. Then what do you think why do you think accounting standards are mandatory? Have you ever helped your company to save money or use their available financial resources effectively? If your organization has 3 bank accounts for processing payments, what is the minimum number of ledger it needs? Okay. What are the sum of the ways to estimate the bad debts? Then what is deferred tax liability? What is deferred tax asset, and how is the value created? What is the equation of asset test ratio in accounting? So students, these are some similar types, some basic questions which you all have already aware of or already gone through it, but there are similar types of questions which are asked. So I'll be sharing this file with you all. Okay, you can go through it, and if anyone has any ambiguity on in any question, you all can get back to me. So these are the different types of questions. So do you all want me to do a Q&A now, since we are falling short of time? Do anyone wants me to do a Q&A with you all so that I question and you all answer, or do you all want time for preparation? Students, these questions are either be asked face to face in the technical round, or you all will be having a written technical round as well, where the questions on accounting will be asked and multiple choice questions will be given, wherein you all have to select the questions. So that also I have covered here in the sheet, where multiple choices are given and where you have to select a particular answer for the question. So it depends on the company whether they can opt for return technical interview or a face-to-face interview on technical questions. So students, now do you all want me to do a Q&A with you all? Okay, I'll just ask you all two questions. Uh, Question number one, why the employees, though being the assets of the company, why are they not recorded in the financial statements of the company? So who's going to answer this? Students, am I audible to you all? Students, am I audible?
Yes, ma'am.
Okay, so that file I'll be sharing with you all, where you all have different basic questions on accounting. But now, just on the sessions that I've already covered, I'll be just asking few questions. Okay, maybe just one or two I'll be asking. So please answer. Okay, so what am I saying is, we say that the employees are the assets of the company. Then why are we not recording it in the books of accounts, or why are we not showing it in the financial statements? Students, do you have an answer for it? See, as the interview, I've
Employees are employees are working under the organization, and we are paying them a salary. So that salary record we will record in the financial statements.
but do we record, like suppose if I'm an employee of Jane College, okay? So do they record me Tanuja as an asset in the asset side of the balance sheet? They don't. Why? What is the
No,
reason?
yes, ma'am.
Do they record me as a asset in the balance sheet of theirs?
No, ma'am.
What is the reason I'm asking? See, again, your accounting concepts plays a very important role. So which concept says that you cannot record me as a asset in the books? In my first session, I have brushed up you all on the different accounting concepts, and the entire accounting is based on the concepts. Yes. So according to money measurement concept, what it says, can my value be measured in terms of money? So according to money measurement concept, what does it say? That since an employee cannot be measured in terms of money, is my worth, the asset is recorded at the value of the worth, that of the value that it is carrying. So is my value can be converted into monetary terms? No, right? So according to money measurement concept, it says that employees cannot be valued in terms of monetary value. That is the reason I have not been shown as an asset in the balance sheet. Only those assets are shown which has a monetary value. Okay, so students, again, your basics are going to play a very important role, because based on the accounting concepts terms only, all your answers will be related based on accounting. So please be thorough with that. So thank you, students. By this we have completed uh, today's session on basics of accounting, and I will be sharing the file with you all which has different questions relating to that is being asked in the interview, commonly asked in the interview. Thank you, students.
Thank you, ma'am.